Alright, what's going on, everyone? Hope everybody's had a good week so far. We're back with the weekly recap outlook video. Got a special week this week. We got midterms coming out. We don't like to talk political in the stock market but sadly, technically, it does affect the market in general. We also have CPI coming out this week, and we're going to talk a little bit about seasonality. So let's go ahead and get into it, okay? Alright, so let's talk a little bit about economic data recap. We had the ISM Manufacturing PMI come out better than expected. I'll talk about that on the next slide. We also had the federal interest rate decision coming out at 4% as expected, 75 basis point rate hike. We originally had a pretty good pump in the market off the original news, coming out, because the minutes and everything that came out along with the statement talked mainly about how we could possibly start lowering rates, just mainly because the Federal Reserve is afraid of over-tightening and causing more pressures in general in the market. But then when we had Jerome Powell come out, he pretty much reiterated that whole Jackson Hole statement, how we're going to keep on doing this until basically something breaks. So that's when we originally had that bullish run pretty much in, and we pretty much tanked the rest of the day. We also had initial jobless claims come out lower than expected. We've been seeing this trend. We have continuing jobs claims continuing being higher. We're seeing the labor market easing by the continuing jobless claims, but we're still seeing the strong labor market month over month, which is actually giving the Federal Reserve more reason to rate hike going into the future. We also had non-farm payrolls come out this week on Friday. They added 61,000 jobs, which is, terrible since you want the economy to ease. Labor market's just booming. We had unemployment rate go up and participation rate go down, which is what you want, but that non-farm payroll is what I was paying attention to mainly. Let's go ahead and break down kind of why the ISM Manufacturing PMI could help predict what the CPI data comes out as. So, if you don't know, the ISM Manufacturing data, it's a monthly report. It's a very important leading indicator on the U.S. economy, which is why it has so much weight when it comes out. The index is basically on a survey of purchasing and supply executives in over 400 manufacturing companies representing 50 different industries across all 50 states, or 20 different industries across all 50 states. Sorry. So, what is the main part of CPI? You can see right here on the left, I broke it down right here. You see that we have housing is 42%. Now, I want to break out home prices from June to August have dropped 1.6%. And then on the ISM Manufacturing data, if you don't understand some of that, what the numbers come out as, it came out at 50.2, where it was expected to come out at 50. Anything above 50 indicates the manufacturing expansion versus the previous month is good. So you see that manufacturing and everything coming out, and I have it listed all the top 10 things that it pretty much takes into effect. So this is why it's so heavy. It's taking so many different aspects of the entire economy and in the country and putting it all in one. So with it being better, we could see a better CPI data coming out this week. Now with that, coming into account, we could see core I'm watching core CPI. Mainly what I'm watching, that core inflation, I want it to be down. The more that you see that inflation kind of come down a little bit, is the quicker that you could see the Federal Reserve kind of back off. Jerome Powell mentioned this past week that, they're going to have to back off eventually. So it's just mainly a when. So you want the labor market to ease and you want inflation to go down. That's your main bet on possibly coming out with a 50 basis point rate hike or even a pivot coming out soon. Let's go ahead and look at some of the economic data coming out this week. On Monday, we have the consumer credit change coming out, expected 33 billion, past was 32.24 billion. I have the midterm elections on Monday, but it's actually on the 8th. Now, previously, we have been very bullish at the very beginning of November, which is part of that whole seasonality. We were very bullish in November, and then we kind of get into a little bit of the lull mid-November, early December, and then we start that Santa rally. So again, we're very data driven right now, so all of this data we need to pay very close attention to it, along with macro environment and stuff going on as well. Thursdays when we have that CPI data coming out, core inflation, they're actually expecting it to be down by 0.1%. So hopefully we see that kind of CPI and that core inflation kind of start backing off a little bit. That would be super bullish going into next week, along with midterms, which is historically bullish. And then, of course, on Friday, we got the Michigan Consumer Sentiment preliminary. So bad news is good news, and good news is bad news. Will continue to go along with within the stock market right now. So looking a little bit of the technical analysis aspect here, we can see that right before every single the last 3 FOMC meetings, you can see that we kind of rose up, like melted up right up until this, right into the meeting, in this rising wedge here, and then we broke down every single time. Now, I want to note, when we originally broke down, especially on the last couple of times, we've seen some real major selling. We hit this level right around 368, 366 level, and we kind of caught a bid. And then on Friday, we caught a lot of support, just mainly because of that participation rate and unemployment rate going up. So what I want to point out is that stock RSI is going to continue to go lower. But watch this MACD. If it crosses, that is your confirmation that we're going to continue into this bearish side. But if it bounces, the 12 bounces off that 26 level, we could continue to see this crossover, especially with that seasonality going on. So you need to keep an eye on a lot of these indicators, and also a lot of the main data and everything that's coming out. Now, looking at SPX, you can kind of see why we were bouncing. We've been catching some bids off of some of these previous supports here, and we're just continually bouncing, which is a very bullish sign. But as we're going into next week, we really need to catch some major support here, because Apple very, very bearish actually since the FOMC. I mean, it dropped from 155 all the way down to 133 on Friday. So we caught a little bit of a bid here off of this top trend line that we were basically just being walked down after the initial breakout. So if we catch the support here, we could be kind of bullish going into this week, especially with midterms. And then as soon as we get to Friday with the CPI data, all bets are off. I won't be holding any positions. I'm just wanted to let everyone know that ISM Manufacturing PMI could be a clue as to what we could expect for the CPI data coming out for this Friday. So if you like this video, don't forget to please like and subscribe. I'll continue with my daily updates coming out this week. Everybody just have a great week and continue to have a great weekend. God bless.